We were talking about IT as a pocket and how Infosys comes out with its numbers today, so that's going to remain in focus. Remember, it's a seasonally weak quarter, but Infosys is expected to do an okay job this time around. Harit Shah of IndiaNivesh Securities is joining us right now to give us his expectations from what the IT bellwether is likely to do. Harit, good afternoon to you. Let's talk about what estimates have you pegged in for Infosys' third quarter.
Yeah, good afternoon. So we are expecting about 1.5 to 2% kind of revenue growth in constant currency terms for the company. I think the important thing to look out for would be the kind of deal wins that they achieve in this quarter. So that has been fairly robust over the last many quarters now. So based on some interactions with industry, we believe that should continue. On the margin side, we are expecting about a 50 bips kind of an expansion. I think aided partly by the rupee. So I think that that is another important factor to look out for going forward. Going into FY21. So their margins have been coming down over the last few years. So we need to see what is the kind of a sustainable level at which they will be able to manage over the next 1 year.
What is it that you're particularly watching out for from the industry this time? Is it going to be any specific geographical performance, any segment that is likely to do really well? Focus obviously remains on BFSI, or the cost aspect of it, and the margin pressures, if at all there would be any.
Yes, so I think clearly BFSI, as you rightly said, I think that is a very critical vertical for it accounts for the largest share for a lot of IT firms, including Infosys and TCS. So that has been under stress for the last few quarters now, especially in Europe. So that is one very important thing to look out for. I think retail is another important vertical. If you look at TCS, they've had 2 successive quarters of slow growth on the retail side, and that vertical is the second largest for a lot of for TCS and Infosys both after BFSI. So these 2 verticals, obviously the outlook for them assumes a great deal of importance. As far as cost side is concerned, we are currently I think we are facing a situation where we have good demand in the industry. Clearly clients are continuing to invest in digital transformation, so that is leading to very healthy kind of a TCV deal wins for most Infy, TCS and all the other guys also. So I think that is not such a problem, and the important thing to look out to watch is the margin profile, because there are multiple headwinds right now that are affecting margins, including the need for increased localization in the US, increasing pressure in terms of incremental so all your incremental deals are coming in at lower margins because of the fact that clients want a dedicated guaranteed cost savings also upfront in many cases. So these are and of course increasing subcontracting cost, that has also been another factor where which has pressurized margins quite severely. So I think that the outlook for margins also assumes a great deal of importance for FY21. So we're not so concerned as far as demand is concerned. As far as demand, there's no demand issue as such. Whatever the global macro scenario, the fact is that the clients continue to invest. So from that point of view, we're not at all really worried about the demand. The greater important thing is the margin profile and profitability. So how IT firms have managed that, what are the main levers that Infy, TCS will use to offset margin pressure sources. I think these are some factors that we would watch out for very closely in this result season.
Do you expect this time around in this quarter as well HCL Tech to outshine the others?
Yeah, so I think this quarter HCL Tech should do pretty well, although within the top tier pack we are expecting Tech Mahindra to do better than the rest, but at least even HCL Tech we are expecting somewhere close to 2.5 to 3% constant currency revenue growth. This quarter tends to be a seasonally strong one for product and platforms. So we need to get a sense of what kind of a growth that they will achieve in this quarter. So this is the first I think this will be the second or third quarter where they're giving out this information. So I think that is one thing that we need to get a better sense of, in terms of exactly what is the proportion of revenue of products that comes in this quarter, and the margin profile also tends to be healthy, for products and platforms. I think 40-50% is the kind of EBITDA that this segment can make. So that will also affect the overall margin profile. So I think this is also another driving force for us that we think will help HCL Tech's margins in the third quarter.
Okay. And lastly, Harit, I would like to know your pecking order within the IT pack. What's your favorite pick? HCL Tech obviously stands out to be one of the cheapest in the space versus a TCS, which trades at 23 times. Infosys, I think, at about 17 times. This one trades about 13 times.
Yeah, so we are currently working on our estimates and our recommendations for all IT stocks right now. We are starting a fresh, so we at the moment we are working on that. But as of now, at least from a business point of view, HCL Tech is one company which we do like, given the kind of prospects that they have. Of course, valuations are also a lot cheaper, but I don't really expect the valuation gap to converge too much. Versus a company like Infosys or TCS, given that their business profile is very different. They've taken on more risk by buying out IBM products business. They've taken on goodwill and debt on the balance sheet. So all these factors will definitely lead to the valuation gap sustaining. But I think it will be more a question of earnings growth led, stock price appreciation as far as HCL Tech is concerned. So it's a business that we do like, and Infosys is another company who I think outlook is fairly healthy. That is reflected by the order wins in the last 1 year or so. For HCL Tech, the concern we need to look out for is the potential goodwill, incremental amortization of goodwill, increasing leverage on the balance sheet. So these factors we obviously need to keep an eye on. And as far as Infosys is concerned, as I mentioned earlier, also the margin profile assumes great importance. What is the steady state that Infosys can operate at, without going down any further, especially given the margin deterioration in the last 3 to 4 years. I think this is something that the street will keep a very close eye on.
Okay, Harit, we leave it on that note. Appreciate you joining us and taking us through what you're expecting from the IT pack this time around. And of course, the numbers, the December quarter earnings of Infosys will come out post-market hours. We will be doing a coverage on that. So do tune in.
Can hear you.
Okay, but shifting focus back to market.